All right, what I thought I would do for the next few minutes is just, first of all, I want to say thank you to so many of you for submitting suggestions for potential stocks to study for tonight's session. You can see that a number of them have been listed here. As you know, in the Manifest Forum, we put out the invitation to nominate stocks of interest, and we actually embed those in a roundtable hunting portfolio. And I'll be talking about a few of these, but what I'd like to do is kind of walk you through how I take those suggestions and then decide what I want to focus in on. Again, you can see that it is at one of our dashboards. I have sorted it by the projected annual return, the far column on the right, and that is in descending order. So, I mean, first thing, Ken has already covered HOGS. I'll move on to the next one there. And then I'm also going to drop down to the bottom of the list and say, I see a lot of very nice companies. These are three of my favorite companies in the world, by the way. 2-6, Buffalo Wild Wings, and Illinois Tool Works. And they're always very high or very prominent in my pounce piles. But the thing that I can notice here is that the projected returns just could be a little bit stronger and take it from there. So let's try to whittle this list down a little. And what I've done here is taken some of the companies that would survive the cuts that I just made, starting with Applied Materials, working our way down with respect to projected annual return, all the way down to longtime favorite Colgate-Palmolive. You can see we've got a pretty good spread of companies that still have very decent projected returns. But what I do here is, again, just kind of up periscope a little bit and look at some of the other companies, cover these, that provide research on these companies. And again, one of our findings here lately has been that this value line low total return forecast is something that they should compare pretty favorably top to bottom. And you can see that the numbers, with one exception, this one's an exception, our projected annual return compares pretty favorably to that value line low total return forecast. In the case of Applied Materials, you can see that it doesn't rank near the very top of our set of companies. You can see a few hundreds and a few 99s sprinkled in here. I would set Applied Materials on the side for right now, just based on this right here. Again, when you're dealing with a less traditional company, Applied Materials is in the semiconductor field, and it's an excellent, excellent company, but it is one of those bumpy cyclicals. And when a company becomes a less traditional growth company, I do put a little bit more emphasis on the S&P for the company. And you can see that they actually have the opinion that it's fairly well valued at 94.7%. That's the price to fair value ratio. And they have a fair value for the company. You might translate the fair value into kind of a market return, a return of, let's say, 10 to 12% for the company. They say that $13.20 is the price that would give that type of return. Not dramatically on sale. Morningstar thinks it's on sale, but again, I would defer a little bit more in the case of a less traditional non-growth company to the S&P people. And again, this 79 is, it has better days. It's an excellent company. There will be buying opportunities. This probably isn't one of those, at least not yet. Strayer Education, I've picked Strayer for each of the last 2 months. Still looks pretty good. I do find it interesting that Morningstar has kind of abandoned ship. They are reevaluating all the education companies. Those of you who follow Manifest noticed that we actually pointed out that there was finally some deterioration in expectations for Strayer. So I'm going to jump over that one for right now. Now, Ken Kabula knows that I have a real hard time jumping over linear technology, but the same thing holds true. It's a less traditional company, non-growth. I look over here and I see S&P certainly does not think it's on sale. So we'll just keep going on. Infinera, fascinating company. Again, less of a core situation. Not quite as strong as it needs to be here. It's not in the top 20% of all companies that we follow. And again, the Manifest rank is a combination rating based on the mathematical combination of projected return and quality. You can see it just isn't quite high enough to get terribly interested. And then we also see that S&P doesn't think it's on sale right now. So again, that would weigh on me as I'm trying to sort through companies and learn more about them. Genomic Health. I don't know much about this company. I would be more interested in it if we didn't already have 30% healthcare. I am going to pick a healthcare stock in a minute, but just that simple reason would dissuade me a little bit. I would want to study that one a little bit deeper. Apple. It's always kind of cool when Apple shows up on our lists. You can see that both all of them. Value Line has a fairly high fair value, as does S&P. Pretty good looking stats. You can see it's near the top of the charts for us. But I'm going to jump over Apple and again, another very interesting company, NBC. But again, I'm going to jump down to this one. We already have this one in the portfolio. Abbott has a 17% projected return. You can see that it agrees pretty favorably with the Value Line low total return forecast. You can see that it ranks among the top 1% of all companies at Manifest. And then I also see that Morningstar and S&P are in agreement. They think it's on sale. Morningstar thinks it's even more on sale at almost 67% price to fair value ratio. So again, this is the one that captures my attention. Plus, it's in the portfolio, and they probably would have come down to either Abbott or Colgate-Palmolive. Love the company. Good statistics, very strong core holding. But I'm going to go ahead and go with Abbott Labs for tonight. Again, no major changes since Mr. Kavula picked it a few months ago. The growth rate continues to be somewhere in that 9% range. You can see that this is one of our conventional stock studies where we have included 2 years of forward-looking estimates. So these numbers shown here for 2010, which is nearly complete, and 2011 are analyst estimates. Good-looking company with a decent 9% growth rate. Awesome profitability characteristics. We look at net margin at Manifest, and you can see that pretty steady, a little bit up and down, but generally in that 18% range for percent net margin going forward. Subjected to an equity analysis guide. Again, everything on the, for those of you that are unfamiliar with this, everything on the left side is, again, a Reader's Digest income statement of current conditions. Everything on the right is literally closing our eyes and thinking about what might this company be 5 years from today. So again, it's a 5-year time horizon. So we see a company, I used year-end 2010 numbers here, $35.5 billion. You can see the net margin is again in that 18% range. That's the projection for year-end earnings and the current stock price. And that's actually down. I believe when Ken Kavula picked it, it was around 51. So it's actually down from where Ken picked it. Pretty good situation. The current PE ratio is only 11.5. So here's your core assumptions: growth rate of 9%, profitability in the form of a projected net margin of about 18%. Gives us a 5-year. This is a 5-year earnings per share forecast of 6.44, combined with a projected average PE ratio. Again, that would be the average of your Section 4 PEs, an average PE of 15. So again, 9% growth, 18% profitability, 15% for the PE, projected average PE ratio, with a payout ratio somewhere approaching 40%, gives us a projected annual return in the 18 to 19% range. So again, we're looking for a company that has a projected return north of 13.25. So again, anytime this company is above $56 or below $56, as it is right now at 46, it's probably in the buy zone. And just for quick comparison purposes, the analyst consensus for earnings is $4.66 at the end of next calendar year, December 2011, with an EPS growth rate of approximately 10%. So again, the analyst consensus for a 5-year earnings forecast is about 682, and that compares pretty favorably to our number up here of 644. We always like to be a smidgen underneath that if we can. Here's Ken Kavula's favorite chart on the company, and again, I have to agree with him here. I don't see quite the strength of patterns in this company. It's been kind of sorting itself out over the last several years, as many of the S&P 500 companies have been. I will point to a couple areas, though, that it has been in pretty much of a free fall for the last couple of months. So that is worthy of some concern, but there's a chance that it is finally reaching the point where it's oversold. It's gone a little bit too far. We also see the potential for some support down here in the mid-40s. So again, the question, how far might it fall? Could easily reach this range and go beyond it, but it would also be quite natural for turnaround based on this oversold condition and this level of support that we see on the chart. Here's a look at the Chronicle showing that some of the purchasing opportunity, or these are the projected annual returns, again in that 20% range. They're as high as they've been in 5 or 6 years. Possibly a solid buying opportunity. And again, Ken picked it 3 or 4 months ago, and I'm just going to be doubling down on it. So with that, we have our 4 selections for tonight. Ken with his Chinese pulled pork company, ticker symbol HOGS. Hugh checks in with Bank of America. Cy wants to double down on New York equivalent of CSI, BioReference Labs, BRLI, and then I'm going to also double down, put my portion of the King's Ransom into Abbott Lab. Do we have any questions, Ken?
Mark, we don't have any questions. I want to thank everybody. This is the second time in a month now that Mid-Michigan programs have had over 100 people. We had 100 people in person at our Stock Pickers Breakfast, 104 people in person about 2 weeks ago. And tonight we topped out at 127 people.
Cool.
So very pleased to have these kind of audiences. And I just hope that we keep growing those audiences in the next couple of months. I really enjoy doing these roundtables. I know that the rest of the guys do too. Mark, anything to say to wind up? Cy, Hugh, anything to say to wind it up?
No. I'm impressed with that Chinese company, I have to say.
Yeah, I can't wait to watch that one. There we go. We'll leave that up so people can see what's
our New Year's Eve roundtable.
Yeah, I don't know what kind of hats I can come up with for that one.
Folks, I can. We're finished with the formal. Folks, we're finished with the formal presentations. I know some of you are just itching to say something online. I'll monitor hands for about 10 minutes. If somebody wants to raise their hand and ask a question or make a comment, go ahead and we'll try to get you online to talk.
Hi, I would like to know, how did you find the Chinese stock? Did you find it with the manifest search?
First of all, I'm not going to invest in any stock that's not traded on an American exchange. So I've automatically limited myself to ADRs, American Depository Receipts. A lot of those are listed in Value Line. A lot of those are listed in Manifest Investing. In fact, you'll find a regular Value Line sheet on Zhongping. It's one of the 1,700 Value Line companies, and I would urge you to get the Value Line sheet at least and read that. So I look for my stocks by doing screening, but again, I'm sticking to American exchanges, sticking to stocks traded on the NASDAQ or the NYSE.
Okay, fantastic.
Mark, we have a comment from John Kimmel. He wants to know if the Fraser-Frost auditing controversy that really hit Harbin's stock price about 30%, is that going to affect small Chinese stocks? And I want to answer that question. John, the very reason that I would put a small amount of money, and in fact, I need to disclose that I do have a very small amount of money invested in Zhongping. The very reason that I'm putting that money in a stock like that is for me to learn about these types of things. So I expect that a year from now, I'll have a lot better answers to a lot of these questions about Chinese stocks. Right now, however, I've done nothing more than put my toe in the water. And again, my psyche is that unless I have money involved, I'm not going to pay as much attention as I would if I didn't have money involved. So I want to actually own the stock. So that I'm going to be forced to do my homework and to follow it and see what's going on with it. Mark, we're getting a lot of questions about the PowerPoints and things being on the Manifest site, and do you have to be a subscriber? And the answer is obviously yes, you need to subscribe to the Manifest site. If I can ever get caught up, and if my wife can ever get caught up, she's chairing Burke and I'm chairing the Viva board. If the two of us can get a couple of spare moments, we'll try to get some of these presentations. I can't guarantee everything, but we'll try to get some of these presentations onto the Mid-Michigan site also, so you can access some of the stuff through your Better Investing membership.
One of the other things I would like to reinforce, though, is if you go to facebook.com/manifest investing, I'm going there right now. You can see here's the dashboard diagnostics event that's coming up, and you can see that we do post stuff there all the time. It's not always buried at Manifest. Here was a group study of fact set as a potential selling analysis.